Okay.
Good evening, everybody. And tonight we've got the great pleasure of having Dave Aquino back with us. We always like to have him here. He's been a professional trader for over 20 years, and he is specialized in the options income strategies for Vanguard Asset Management. So he is constantly in the throes of option trading, and he always has some very good information and techniques for us. So with that, Dave, welcome back to the Candlestick Forum. Once again, we're anxious to see the information tonight.
Thanks, Steve. Hello, everybody. Good evening. And again, thank you very much to Stephen for having me on. It's been about a year since I've had a chance to talk to you guys, and a lot has happened in the markets. We really enjoy working with Steve. So again, thank you very much for the opportunity, and thank you, everybody, for being here this evening. Again, my name is Dave Aquino, and I am the head options trader at basecamptrading.com. We do a lot of trading education over there. We like to talk about different option strategies that our traders use. And we're looking at this from the standpoint that some traders, especially those just getting into the markets, tend to have smaller accounts. And just because you start with a smaller account, because everybody starts from the same place, you know, when they first try starting trading, that doesn't mean you have to be limited in the opportunities that you have. So I'm going to share with you a strategy that we teach at Basecamp Trading, and hopefully you might feel the urge to take advantage of it. So this program is called our Options Trading Accelerator program, Profits for Smaller Accounts. Again, thanks again for Steve for that introduction. I've been in the markets a long time. Started out at age 23 as a broker with Merrill Lynch. That was back then when we used to call everybody on the phone, make 250 calls a day, and it was as bad for us as it is for you to get those calls in the evening. So I'm glad we don't do that anymore. After gaining some experience there, I worked with the Vanguard Group for about 15 years. 12 of it was in the asset management department. So we've got a lot of experience trading option strategies to generate income. I've been with Basecamp Trading over 7 years, and this program that I'm going to show you tonight is something we developed in that 7-year time. So Basecamp Trading, we're like a big family. I know Stephen's community is very similar. We work with individual traders, and you all know that trading can be kind of a lonely environment. So it's good to have a community. This is kind of a picture from last September. 50 of our traders joined us for a live program in Raleigh, North Carolina. So that was a lot of fun. We try to make it a community because you know, it's kind of hard to talk to your spouse about trading if they have no interest. But when you have 50 friends, you can talk online. It makes a big difference, you know, to have that community. Like I told you, I had 24 years of financial industry experience. But while I was working for other people back at Vanguard, back in 2011, I came to the realization that the only way to make real money in the markets was either do like my high net worth clients do, and basically save as much money as I could for 30 years and pray that we would stay in a bull market. But I lived through the Asian financial crisis in 1998, the dot-com boom and bust right around 2000, 2001, and the housing financial crisis in 2008. And I had to talk clients off the ledges, literally, during that time. So realize that you can't depend on a bull market. What you could do is basically wake up and learn how to trade your own money and try to take control of your financial future. At least you'd be in charge of making your own fortune and making your own decisions. So when I started, I had 16 years of stock market and financial industry experience, And I realized that's not that useful for making money as a trader because trading is way different from investing. Okay? So basically I had to reframe my market actions as a trader. I had to focus on using good trade setups, use good risk control, because even having the best ideas are great, but you have to understand you don't win every single time, and having that good risk control is really important. We approached it from the aspect of trading consistently, okay, and then doing that well, and realize that just starting out, it's okay to have a small account, because if you're going to make mistakes, making mistakes on a smaller account is a lot easier to take than making mistakes on a large account. So I joined Basecamp Trading's futures trading room. So 7 years ago, I was in this very same situation as you guys are now. You're sitting here watching a webinar. Well, I watched a webinar. I found that I enjoyed Basecamp Trading. And a little hint here. Back then, 7 years ago, I actually attended one of Stephen's webinars. So it's kind of funny how we come full circle. But I joined Basecamp Trading. I was there for 6 months. I took those techniques that we were trading in futures and started a discussion with the moderator, Thomas Wood. And a couple of weeks later, they offered me a job. And here for the past 7 years, I've been teaching and mentoring others. So it's a great opportunity to continue to learn. So if we keep looking forward to, why are we here? I just have some fundamental questions. Feel free to respond if you'd like. How long have you all generally been trading? In terms of number of years, or you've been at it 6 months, or I've been at it 2 decades. How long have you generally been trading? Okay. Wow. Yeah, there's a nice wide range here, but there's a number. They're pretty consistent. We're talking years, not months. So that's excellent. So how many of you do you consider yourself successful? Are you making good progress if you're not consistently making money? Yeah. So sometimes it takes a while. Yeah, you're just starting. Okay, yeah, pretty good for several years. Well, for those of you that are not quite to that point where you're consistently making money, you probably have in your mind, why is it taking so long? Because the majority of traders are very highly intelligent people. Either you have careers, you're highly educated, you have careers. I can't count how many doctors, lawyers, business people, entrepreneurs, professionals in their chosen field with, not only college degrees, but master's degrees and PhDs and MDs and all that. And I also have traders that maybe just never went to college and are very successful. But the problem is, it would seem that trading should be easier than it looks. Okay? So, to be honest, probably a lot of you, especially the ones that are not consistently, hitting on good trades, this is probably what your 2019 account balance looked like. You had some winners, but the losers tended to outweigh the winning trades. And sometimes losing trades kind of feed on each other, and it just makes things progressively worse. So, the question I have for you today is, what are you going to do differently today? Okay? So that going forward, you're going to get going in a positive, profitable direction. Okay? And a lot of you says, well, I'm going to try really hard, but honestly, I don't even know where to start. Okay? So how about this? Some good news. Profitable and consistent trading is about 2 things. Okay? Knowing a few consistently repeatable trade setups and learning how to execute them accurately. Okay? And then you continue to trade that setup. You seek to continuously profit from those trades on a regular basis, and then you repeat that. I liken the process to If someone came to me and said, I want to learn how to play tennis, can you teach me how to hit a very good serve? Well, basically, you need to know the fundamental mechanics and make sure the way you hit the ball is very consistent. And then you repeat it again and again and again. Okay? And if you can do that, you will eventually master how to hit a tennis ball and then how to hit it well. Well, trading is the same thing. A lot of traders come into trading and they say, okay, I'm going to try a little bit of this, a little bit of that, learn something from everybody, and then I'll be prepared to trade any opportunity that comes about. Well, you're trying to do everything, but you do nothing, one or two things very well. Okay? Some of our most consistent and profitable traders only trade one or two setups, but they can trade those one or two setups blindfolded, so to speak. Okay? So master something that works and then repeat it and refine it and keep improving it until you can do it almost automatically. Okay? So I'm here to help you tonight. Let's hit on 3 important topics and see if it will help you make trading more profitable. All right? First thing we want to focus on is profit consistency. Generating consistently big gains. A lot of our traders, when we first start coaching, usually have their eyes are much bigger than the potential trade in front of them. That they're aiming for really big returns. Maybe they're using a whole lot of leverage, and they initially then get burned. Okay, they take a big position, they get burned, and or even worse, they take a trade and they'll lose. They'll take another trade and they'll lose. And after a while, all these repetitive losses, they tend to get more and more gun shy. So as soon as they get a little profit, they take that profit. They don't let their winners run. So you're either having big losses or you're having a lot of little losses and they make no progress. The key to trading well is that you can consistently profit, but then your gains are big enough to outweigh the losses that you have. Okay? The second thing is selecting good trades, and this goes back to your trade setup. Selecting trades that have a higher probability of success and have a good reward-risk ratio, and then while you're trading, minimize your losses, and that goes back to the reward-risk ratio. You want to make sure you're making enough money on the winners to offset the losses on the losing trades, and hopefully winning more often than you lose. Okay? And then make sure that the trades that you're taking are repeatable. Okay? Now, you guys have been seeing what's been going on in Tesla the past couple of days, and I actually had one trader in the room, and he actually caught almost $100 move in Tesla. Went out, bought some calls. He thought it was going up. It went up, and he actually caught the wave. And when it moved $100, he sold those calls, and he must have made 6 or 7 times his money. And he was telling me about it. He wasn't bragging, but he was quite proud of the fact that he had made money, and I was happy for him. Okay, because he had not had much success with his trading. And I said, okay, that's a great windfall, but can you do that again? He's like, I don't know if I can do it again. I don't know if Tesla's going to move $100. The key to that situation that was just like him buying a lottery ticket, because he didn't know if he was going to win or lose by buying that call option. Okay? Now the situation is he won on that ticket. But that's not trading. That's just buying a lottery ticket and winning it. Because if it was the situation that he's going to use that technique to make money, you need to be able to do that again and again and again. Because trading is not an issue of, hey, I got lucky, see the results of my trade. No, it's being able to apply a particular technique to situations in the market on a regular basis, whether that's intraday or on a swing trading time frame, but being able to generate profits from the same trade setup that you're good at executing. Okay, if you're just out there just taking wild swings, you're never going to get better. But if you go at it as a process, it's something that you can repeat and become good at. Okay? So let's just talk about the subject of consistent big gains. Okay? Let me see if I can get, just answer 1, 2, or 3. There's 3 different choices. Which describes you? Okay? Are you a trader that piles up a bunch of small gains and then kind of gives it all back to the market in one big loss? Or are you a trader that might benefit from a big gain and then you find that you kind of whittle it back and give it back to the markets with lots of small losses? Okay? Or, I mean, those 2 things it's the same situation, but because of different causes. Okay? The number 1 is that you're not really managing your stop losses. 2 is that you got lucky and you're not consistent enough, and you take small losses that give it all back. And then 3, which hopefully none of you are, you have lots of big and small losses, and you just don't know why you keep losing. Okay? Yeah. I mean, some of it is psychological too. Okay? Some of it's psychological. All right. So in order to trade well, you must make consistent profits because a couple of reasons. It costs money to trade. Not every trade wins. So you're losing trades, the percentage of trades that you don't win, you actually have to make up for through your winning trades. If it's almost like making progress, going 2 steps forward, 1 step back, 2 steps forward, 1 step back, you realize I'm doing all this activity, but I'm just slowly making single step moves forward. Okay? Not every trade wins. Now, this is one thing that a couple of my strategies tend to be higher probability. The second thing that's very important in order to have consistent gains is that you have to win often enough and hopefully more frequently than losing, because that helps keep up your confidence and motivation. Okay? Let me put it this way. If you went into trading every day and you knew you were going to get, you would win 20% of the time, but that 20% of the time you would win big, okay? And you would go in, you'd take a trade, and you'd lose. Go in and take a trade, and you'd lose. And you do that 8 times in a row, and you'd lose. And then you'd win 1 or win 2, and then you kind of get back to even or maybe even a little ahead. You go back to work the next day. You still realize that the majority of your day you're going to be spending losing. That's very hard psychologically to do, okay? Even if it was 50-50, that would be okay. But if you're losing a lot more than winning, you lose motivation. You don't want to go into work anymore and go to trade. Okay, so this is another reason why consistent winning and consistent gains is important. It's a psychological thing. And then third, the reason why you have to make consistent gains, some of you are retired. Some of you are trying to build a nest egg. Some of you are replacing income that you sold your company or you left the company and now you're trying to be a full-time trader. Okay? You just might have to live off part or nearly all of the gains that you generate. So consistent profits are very important. Okay? The nice thing is I trade options and I use option spread combinations, and I like that because you can use options to generate leverage in your trading, to leverage up your gains. Okay? For those of you who don't know, an option allows you to control 100 shares of stock. That's pretty significant because I can go out and buy, basically control 100 shares of Amazon, which is $2,000 a share, and I could probably tomorrow morning probably be doing it for about $1,000. Okay, that's what you mean by leverage. Okay, and again, with as little and some of the smaller size companies, smaller price stocks, I mean, those options cost anywhere from $100 to $200. Or if you're using spread combinations, they definitely can be anywhere from $100 to $200. Okay, leverage is available to those that know how to use it. Okay, so this is an example. It's a trade that we look for a lot, and it's probably something pretty simple. Here I've got a Netflix on the daily, and it's just a 2-line moving average. And I don't know if anyone of you ever traded spreads, but here we got a moving average cross, okay? And then we break above the weekly high because this is a daily chart, actually going back 2 weeks. And once we see that break, we look for our next target up here. I don't have the whole chart, but a previous pivot high is about $10 higher. I'm trying to double check this the price. So 320 to 330. 350 was actually the upside target when we broke 317. So we'll step in here. We will buy a spread combination with calls. And if I remember right, this is a $10 wide spread. A $10 wide spread usually costs us anywhere from $3 to $3.50. Times 100 is $300 to $350. We sold it up here for about $6. So we make about, let's see, on the low end, $250 per spread. That's really not bad because the spread itself costs you $350. You make $250. That's what we call leverage. That's about a what's that? About a 60. Hold on, I want to get my math right. So it's 250 divided by 350. We're talking about a 70% gain over the course of a couple of days. Now that's on the daily time frame. We have multiple opportunities to trade option spreads on a regular basis. Okay. Oh, there it is. It's a $10 wide spread. I'm sorry. I'm doing my math wrong. We didn't sell it early because this is a daily chart. Usually we're trading intraday, so we're buying it for about $350 and then we're selling it same day. We actually hold this to expiration and it closes above the spread, so the entire $10 wide spread's worth $1,000. So in this case, we make 185%. Okay, that's the power of spreads with the correct timing. Now, this kind of pattern, a moving average cross, happens all the time. So that's one example of the power of spreads. Okay, and most people, even with small accounts, can afford a $350 trade, right? It's not too far out of the question. All right, so again, there's the trade. A bullish Netflix trade, bought the 320 call option, sold the 330 call option, probably same week. Someone's going to ask me what the expiration was at. The reward risk ratios, we're trying to make 1,000, we're risking 350, so that's kind of close to 3-to-1 ratio. That's kind of what we're looking for. The profit on, if I traded 4 of these spreads, which cost me about $1,400, is a $2,500 profit. Net profit. So that's a really good way to trade and can be quite profitable. No, mine are pretty much that. When I got in, you can see. Let me back it up. When it crossed the high at 317, it was slightly out of the money. Yes, it was slightly out of the money. The main reason why those strikes were selected was it was we were projecting where price was going to, which was $350, and we wanted to have a good chance for price to go right through it and potentially close someplace at or above the short strike, which was 340, and then it closed around closer to 350. So that trade was successful. All right. So that's an example of consistent gains. Okay, how about the idea of taking good trades and minimizing losses? And I kind of alluded to this in the first slide, and it's the idea of using a high reward risk and keeping losses under control. Okay, to the traders that usually start out with me that have had some trading experience, probably some of the hardest things to do is to utilize a stop loss level, because to most accomplished and educated people, it is hard to admit that you're wrong. Okay, because to most beginning traders, when you have a trade that goes against you, it actually feels like you failed or you did a miscalculation. You want to double check your math, and because you know you did the problem, right? Just like in school, right? You knew what the answer was, but you still lost. So you go back and you think, okay, maybe it's something I did. Okay? The honest answer is trading is a probability game. Okay? You're going to win a certain percentage of time, you're going to lose a certain percentage of time. So it doesn't necessarily mean that you're less or more or less intelligent or not intelligent. It has nothing to do with it. It's a matter of execution. Okay? And again, sometimes that's an ego thing. So all you need to do is have the rules, follow the rules, and follow the trade setup. If you do all those things well and you have a good trade setup, all you have to do is follow it and you'll be successful. Okay? That's honestly why back when I started, a lot of large trading firms, they could actually bring in, people without college educations, maybe even from high school. They're intelligent. They just don't have a degree, but they give them a set of trading rules and they follow those trading rules to the letter. And they've become very successful traders because it's not necessarily a question of experience or intelligence or education. It's a question of following the rules. Okay? So part of the rules is high reward risk ratio. Okay? That's the quality of the trade that you take, and have the discipline to keep your losses under control. Use good stop losses. Okay? That's key. A couple of people asked, which option expiration do I trade? Yes, I trade weeklies. Okay? Now, from the standpoint of making more on your winners than you lose on your losers, I like to have a reward risk ratio of 3 to 1. When I'm taking directional trades, for every $3 that I risk, and that's utilizing a stop loss, I want to make 3. Okay. The idea is sometimes with your stop losses, sometimes a good defense can offset a weaker offense. Okay? And part of that is using stop losses like we were talking about. But the second thing is, excuse me, the second thing is, and I know a lot of beginning traders do this, you do not, under any circumstances, add any more contracts or shares or add on to your current position when it is losing money. Okay? You do not want to double down on your position because you know it's going to turn and go in your favor any moment. Okay? That's a very good way of magnifying your mistakes. Okay? So 2, don't add to a losing position. And then 3, don't give up on a position. Let's just say you have a trade on, it goes against you. Maybe you use your stop loss, maybe you don't. And then now it's worth half the amount of money that you put into it. And you say to yourself, well, it's going to expire in about a week. I'm just going to leave it alone. I don't care if I lose that money. Don't give up on that position. If it meets the exit criteria and you should be stopped out, get stopped out and take your money. Okay? Because what you're doing is limiting as much as you can your losses, and therefore you will naturally have a higher reward risk. Okay? It doesn't mean anything if you get stopped out, as long as it's in line with your expected win-loss ratio. Okay? That's just part of the game of trading. All right, so this is one set of trades that we use in our Options Accelerator program. This is where we kind of shift. We're trading large cap stocks like Amazon. We love to trade expensive stocks. Now, primarily because they have a tendency to move a large distance. Therefore, we can utilize fairly wide spreads. It's hard to make money on a $2 wide or $1 wide spread. You just can't do it. But if you can go $10 wide, $15 wide, it has some capacity to move. So in this case, with this type of trade, it's a 1 minute time frame. We trade a lot of intraday trades in my trading room. This is a mid-morning. We call this kind of a box reversal. In that we're looking for a 50% retracement of the initial move of the day. It comes around anywhere from 10:30 to 11 o'clock, and in this case, we actually get a double bottom here in Amazon, and it reverses up. Now, I believe I have the details on that. So this particular trade was kind of cool. Remember, it's smaller. It's a $10 wide spread, and we got into it anywhere between 300 and 350 per spread, and it's a $10 wide spread, so it actually goes through the spread, but because we're not at expiration, it's not maximum profit. As it's going through here, we're able to sell it for $500. That's fine. I did my math wrong. This is 550. I think that's what it was. And I think that was the case. Yeah, it was $5.50 because $5 is a little bit cheap for a $10 wide spread that's in the money. But bullish call debit spread, we go from 350 to 550, and we did 10 spreads. Usually my default is 10 spreads, which is kind of neat because a $200 profit per spread, $2,000 in 10 minutes. That's the kind of leverage we're kind of playing with, and Amazon does that a lot. That move right there, we were aiming for a 50% retracement. You see the Fibonacci from the high to the low. This is a 50% level, and that's where we were aiming. But once it got through there, it gave us actually a triple top pattern. When we saw it was going to fall short right about here, that's when we sold that. And again, because it's all in the money at that time, we were able to get 550 out of that. Right? So again, that's an example. I showed you a daily chart and I showed you a 1 minute chart, but they're still generally repeatable type of trading setups. Let me show you a couple more, because trading setups are what we kind of stage all our trading around, because our goal is to be able to consistently make money on a regular basis. So we want the same setups, the same entry, the same management, the same endpoint or exit kind of strategy, and the same capacity to make a coherent trade. And we want to do that again and again and again, because that actually builds your familiarity with the trade to the point where you actually develop an intuition when you're trading, because you've seen that setup so often and under different circumstances. So every single time they're a little bit different, but they're generally very similar. Okay? Again, I mentioned they're repeating patterns in stock behavior, kind of like that directional run and then a double bottom and then a 50% retracement. We play this portion of the trade. And if we do that on a regular basis, either going up or same thing, going up and then double top and then a retrace down. Oops. Sorry about that, guys. Um, let's try that again. Yep, that thing's misbehaving. So anyway, same opportunity, same trading technique, entry, stop loss, and exit. Okay? So the one thing we stress, especially the traders that we mentor, okay, is that if we're not trading repeatable trading setups, we will have no consistency. If you're just going out there and trying to wing it, okay, just whatever happens, I'm just going to try different trading styles, different time frames, looking for different patterns, trading different securities, honestly, you will have an extremely hard time to developing your trading skills, because trading is an actual skill that you need to practice by repetition. Okay? Market is not going to pay you more money because you know 20 trades, 20 different ways to trade the S&P 500. Okay? Or the FANG stocks. Doesn't care. All it cares is that you can trade well. And in order to master a particular trade setup, you have to repeat it over and over and over again. Okay? So I know we're kind of coming to the presentation part of my session. So remember what I kind of was talking about at the beginning, talking about how consistent you were with your trading and how well you've been doing. You know, let me ask you a couple questions. What would it be like if in 12 months, what would your trading look like if someone just sat you down, taught you a couple of proven trade setups, and gave you the step-by-step checklist to go through every single time you trade it? Do you think you would improve as a trader? What happens if I showed you that those trade setups that I'm going to teach you make real money, and pretty much in any market, bullish market, bearish markets, or even sideways markets? Okay? And what if I could prove to you this way of trading really works? Okay? The three options trading accelerator setups, the trades that we teach, are the momentum breakout trade, the box reversal trade, the one that I showed you. We also call that, we have a specialized one called the mid-morning reversal, and that happens right around that time frame I told you, 10:30 to 11 o'clock. And then a very common, but I don't think utilized as much these days, a bullish and bearish cross with momentum type trade. Okay? So you saw the momentum bull cross. You have two moving averages, they cross here. It breaks a major level of support. It doesn't, it should be pretty easy. Or in some cases, if you don't have support and resistance like this, you just hit the cross and you go ahead and enter the trade. Okay? It tends to work really well on daily and hourly charts. And when you get that signal, you can go ahead and put on, this is a slightly out of the money option, debit spread. A lot of times we'll do an at the money debit spread, and that's fine. It doesn't matter the cost. We're not really looking for a huge amount of leverage. What we're looking for is consistency in generating profits very quickly. So we teach that particular trade setup. Again, in this case, because it's on the daily chart, and then because we're using weekly options, it expired that same week. Because we were playing the breakout, we were hoping that it would expire in the money, and it did. So we got max profit on that debit spread. Now that doesn't happen too often. Usually we're very happy if we approach 100% gain, and we're more than happy with that. This is one of those box reversals I showed you earlier. This is actually in the S&P. Again, kind of a day trade. Price moves up all morning. We get in a double top right here, and we're looking for a 50% retracement. Okay, it goes all the way through, and in this trade, it's another $10 wide spread because you can see the length of the directional move, and we're looking for a 50% retracement. that 50% retracement is about $12, maybe $13. As it starts to break lower, we go ahead and buy the spread roughly $300 or $3 a piece, and we sell it for $5. This is more typical of what we get intraday, and that's fine. To get a 67% gain on a spread is very, very functional because the leverage is there. The nice thing, too, is someone asked me, like, well, what happens if I had more money? I said, do more spreads. It's not like we're trading options that don't have volume. This is the S&P 500. You can trade Amazon. They've had hundreds of contracts traded every day. So if you step in there and you want to trade 10 spreads, that's fine. You'll get filled, and you'll walk away with 10x 200. It's a $2,000 trade for a little over that's about an hour. Okay? And this one is really good. And this one is something that you could have taken advantage of in the past couple of days. This is very simply, it almost looks like that Netflix trade. And it's a break of the high. And once it broke this is an hourly chart. And this is remember the pullback from the coronavirus. We actually put in a double, actually an inverted head and shoulders pattern. And then we gapped up into this resistance level. And once we broke 3,300, we did a $10 wide spread. And $10 wide spread, we got in for about $350. Okay, and it went all the way through. So the value of that spread is now approaching $10 a piece. Okay, as it matures, as it gets closer and closer to expiration, it'll be worth $1,000. So this is actually the trade we have on right now. Okay, so it moves higher, and then when it gets to the point where we're at 33. This is 3,300. This is 3,310. Gets to the next level. We put on another $10 wide spread. When it hits 3,320, we put on another $10 wide spread. Do you see the pattern? We actually call this a debit spread ladder. Okay? Each one costs us about $350, and then its value is about $1,000 or $10 per spread. So it keeps moving higher. So as it continues to move higher and goes through each of these price levels, we put on another spread. And to the point where we are kind of sitting today, and we're kind of trying to break through 3,350, and so we have another 2 spreads there. So we have 1, 2, 3, 4, 5 spreads. Hopefully we don't roll over and pull back, because I know we're sitting at 33.45. So this last spread has the capacity to, if it expires above 33.50, all of these spreads expire at maximum profit tomorrow. Okay? So if you look at it, each of these we're buying for $350. Hopefully we're looking for a potential value of $1,000 per box. So that's potentially $5,000 based on, we're basically making $650 per contract per box. And all we're doing is riding the trend higher after we broke that previous swing high. Okay? And again, that's just nothing more than a momentum breakout trade. Just traded with these spreads. Now, the nice thing is if you have a small account, this trade costs you $350, this box costs you $350, this box costs you $350, this one and this one costs $350. And guess what? Okay, now you have the capacity. You do that $350 times 5. Your investment is $1,750, and you have the potential to walk away with that trade with potentially $5,000 tomorrow. Okay, cost you $1,750 total, and you have the potential to walk out of there with, again, close to $5,000. No, I'm just holding them. Someone asked me, do I close out the spreads? No, You could if you wanted to and kind of roll it from there. As long as I know that this is moving up and I know my expiration date is tomorrow, these become more valuable the closer you get to expiration based on time decay. The deltas are basically getting close to maximum, okay? Or the value of each spread is getting closer and closer to maximum. That's why they're increasing in value. All right? So the cool thing is I've taught this workshop before, and one of our traders right here, Carla, she is a pretty good trader. She has some experience. I would say she's probably very familiar, very similar to you all here in the trading room today. She's been trading for a while, but hasn't found as much success as she would like. Right there, she said, I put on the first trade in this Options Accelerator course, and I'm up over 4,800 in my account. And my kids who have small accounts can't day trade and are up over 1,300. And if I do recall, Carla's probably trading 10, maybe 12 contracts is usually what she tends to trade. Okay, so the nice thing again, she's trading a big account, which is hers. She's trading her kids' accounts, which are swing trade accounts because they can't day trade, they don't have enough money, and they're up 1,300 there. Okay, and the situation is this is a means by which traders can profit while they trade, while they learn, okay? Because if some of it is the setup. A debit spread is very easy because you buy a vertical, you sell a vertical spread. That's it. And most platforms can easy in, easy out. So again, it's not difficult to make money when you're using the leverage of options the right way. All right, so I'm going to break down, here's the opportunity. I know Becky was going to put on a link here in a second, but this Options Accelerator workshop, I'd like to offer that to you tonight. It is the way to learn how to combine options into these various powerful spread setups. You're going to learn how to maximize your leverage. That's delta, that's the price, while minimizing time decay. That's one thing I didn't talk about earlier. You got to be careful when you trade options because a lot of you just buy options, sell options, especially if someone told you one time to buy the cheap options. Well, those options decay very, very fast. Okay? And if you're trading with spreads in the right way, you can actually minimize. You can't eliminate, but you can minimize that time decay because you're actually using both long and short options. I teach you that all in the workshop. But generally speaking, you can minimize your time decay as much as you can. The nice thing is this Options Accelerator workshop teaches the step-by-step trade setup so you can make consistent money because I'm not teaching you 20 different ways to trade. I'm pretty much teaching you 3. Okay? So if you know the entry, you know how to manage it, you know how to exit it, you'll be making profits when some people are still hesitating and the move's already left them behind. Okay? This is the one aspect I really, really like. Do you have a small account? Don't worry about it. It's not a problem. Because if you're trading one spread and your friend is trading 20 spreads, your friend makes more money because your friend has more at risk. But the percentage gain is exactly the same. Okay? So you are rewarded the same amount as your friend, percentage-wise. And, well, what happened? How do I get more spreads? As your accounts grow, because you have experience and you find success trading, you're going to be increasing slowly the number of spreads that you trade. Okay? And it's not that expensive per spread, so after a while, you could be really making as much money as someone trading, 10, 20 spreads. All right? The nice thing also is you don't have to learn a new technique when your accounts get bigger. You have to buy more spreads. So what you learn when you're starting out with a small account is the same technique you'll be using when you have a big account, and you'll be still making the same large percentage gains. Okay? This workshop comes with step-by-step trading checklist, so you can follow step-by-step. You're going to eliminate as much as possible the trading errors that most people have, just trying to wing their trades, and it allows you to, when you follow the checklist, to actually master the right way to do the trades. Okay? So initially, when we introduced the Options Trading Accelerator workshop at Basecamp Trading, it was $497. 3-hour workshop with a lot of support materials. So our education is valuable, so we charge appropriately, $497. Now, it's been a little while since I've developed the course, but it's allowed me to develop extra resources for traders with our Options Accelerator course. And this is a bonus video in which I break down the 3 proven options trading trades, and I do so each trade by itself, and then I give you a PDF checklist for each of the 3 trades: the momentum breakout trade, the box reversal trade, and the bull bear cross with momentum confirmation. Okay? Again, these trades are perfect for smaller accounts, and they are scalable. And I would always recommend you print out the PDF checklist and follow them step by step. All right? So that program, when I added it on, was $299. I had an exclusive Mastery Q&A session for all our Option Accelerator traders. Q&A, live video showing them how to apply the trades in a live session, and it was exclusive for our workshop buyers. So I included that in the workshop, and it cost $299. The other thing is I had one more development, some additional updates to the program, and we call it the Guarantee You're Going to Trade Better video. Our goal when we create workshops is that you make your money back in profits. Okay? We want you to be consistent with your trading, that you make money. A lot of our traders take our workshops, and their goal is to basically pay off the workshop before the credit card payment is due. Now, a lot of them do that. So the goal right there, make sure you can make back your workshop costs and more. So we're going to include that video for that special program. Now, the one aspect, sometimes our traders want a little bit more hands-on guidance. So we've included a 30-day trial for our Platinum membership. We have an email and iPhone, Android app, and this is where I do Option Accelerator trades in the trading room and at the end of day videos. Right now we're looking at Option Accelerator trades in Amazon, in SPX, especially if they break the all-time high tomorrow in SPX and in Amazon. You'll see there's a resistance level it's sitting at, looking for a $10 to $15 move. Let me just triple check that. I'm thinking bullish because I've been looking at the charts, but I don't want to tell you the wrong way. Actually, I'm looking for a potential. So I was going to mess up I can't not do this correctly. I'm actually looking for Amazon to break higher. I'll show you this. A retest of the previous day's high. So getting back up to 2070. That's what I'm looking for. So again, this is part of your Platinum membership. We're going to give you a 30-day trial there. And again, we're a community. And someone mentioned there's a whole lot of guys. There's actually a large number of lady contingent there too. And we have people from all over the country. One from South Africa, 2 from Australia, several from Canada. There's actually traders within our community that have actually been at Basecamp Trading longer than me. So we have a very strong community, helps each other. So we're going to give that to you, so that way you can catch some of the Options Accelerator workshop trades with us. So if you put the whole package there together, it's $14.91. But for Stevens people tonight, we're very happy to give you a special deal. We want you to really start out Q1 this year really strongly. So just for thank you for your time, to give you some tools to really attack the market, because we think there's a tremendous amount of opportunity. We're actually just going to give it to you today for $47. Okay? It's like, it's kind of a silly thing. You're going to end up spending more in your commissions on your successful trades in your first couple of weeks, but oh well, we're happy to do it. www.bctnow.com/grow. You can sign it up right up there. Becky has put that in the chat for you. So give us a try. Here's the thing. You pick up the workshop. The video and checklists, the 2 bonus videos, they're yours. It's not a limited time that, as long as some people say, okay, as long as you're a member, you can have access to it. No, we'll give it to you forever. So take the workshop, take us up on the offer, and hey, take 1 or 2 trades, and take a look at the videos that I sent out in the evening. You're going to get a couple of good ideas. Markets move strongly. You're going to make much more than $47. So it's just our way of getting you to know us and seeing how we can help with your trading. Again, I really enjoy talking to Steven's group because you guys are very knowledgeable. And again, I appreciate the opportunity to be here. So if anybody has any questions. Yeah, oh, one other thing. Someone asked about the Platinum membership. It's a trial for 30 days, and after 30 days, there's a recurring $97 a month. Yep. Now, the cool thing is we actually have a futures and options room. The futures room that I joined when I was sitting in your seat, he's actually still there. And we actually run our futures trading room from 8 in the morning till 4 o'clock in the afternoon. So it's the whole day. If the bullish put credit spread settles above my spread, the spread will be at maximum profit tomorrow afternoon at the close. Yep. Yep. Yeah, I'm not worried about that SPX trade. I actually think we're going to get a good non-farm payrolls number. So we should break to new highs. Do I ever sell spreads instead of buying them? Yes, I do, Jake. I have another strategy. I think I spoke on it last time I was here with Steven. And you can learn about that in the trading room or through the resources you get when you're a member of Basecamp. But yeah, we do. And we actually do that quite well. However, selling credit spreads actually requires a larger buying power requirement, and sometimes it's a higher level of option authority, so to speak. I don't remember what exactly you call it, but clearance. Buying and selling, buying verticals is not as intense because the risk is controlled to the value that your debit spread costs you. If it settles between the strikes, let's just say in the example is a $10 wide spread, okay, and I paid $3.50 for it, and it settles right in the middle, so it's $5 in the money, and this one's $5 out of the money. The value of the spread at expiration is $5, so I still make $500. Okay, so I spent $3.50. It's worth $500 at expiration, so I still make a $150 profit. Yeah. Okay. Yeah. The reason why we like, again, options trading Accelerator, it's a way for everybody to make money, and it's a way for everybody to utilize leverage in a very good way. But again, you can manage your risk based on how many spreads you take. You know, it all depends on your account size. The 3-hour workshop is actually a recorded video. As soon as you sign up, you'll actually get all the details on how to access it in your members area. That's why the Platinum membership is kind of part of it. So you could watch it this weekend. Be up and running very quickly. Okay? In what extent do I use Greeks? The way we structure the trades actually manages the Greeks for us. We don't need necessarily, because we're doing pretty much everything very close to at the money, and we don't mind paying a little bit more for the spread because we anticipate the market movement. So we're looking for it to move through the spread relatively quickly because our target's usually on the other side of the spread, and that we're either getting out when it hits our target, so we're not. And we're doing that before it reaches expiration. So that's why sometimes we'll do a $10 wide spread and get out for $550, $600, and when it could be worth 10, but it's not at expiration. It's just all in the money. But in the case of the S&P 500 trades we have for tomorrow, those will be, that's on the daily hourly time frame, and then we're looking for it to expire tomorrow because those options expire tomorrow. And if they expire in the money, the spreads are worth the difference in the strikes, which is $10. Can you access these videos past 1 month? Absolutely. That's the thing. If you decide that, say, hey, it's okay, I'm not going to continue with the Platinum membership, which we hope you do, but if not, everything else is still yours forever. Yeah, you'll still have full access to that. We won't take it away from you. We're not won't do that to you. The $47, the workshop, the videos, all of the checklists, the PDFs, all that's yours. This can be intraday trading, like I showed you, and this can also be swing trading. It just depends on the time frame you're seeing the trade opportunities. I try to give you swing trading in the daily videos, so to kind of show you that. And if you're in my trading room, we're looking at opportunities that you could take with intraday trading too. Yeah, we can do that, RB. You're saying, can you start the free month after you watch the videos? Sure. Just send an email to our support, and you'll get that with the sign up. That's fine. We'll help you with that. Yeah, are all the trades that I take spreads? No. I take intraday option trades, directional ones. I take spreads intraday. I take spreads as swing trades. I do credit spreads that are swing trades, things like that. But the workshop that you're getting access to here is swing trading spreads, or not, I can't say swing trading because we have an intraday aspect to it too. So it's just trading directional vertical spreads. Okay? Thanks for the question, Frank. All right. Any other questions, folks? No, we don't do scanners. We don't do scanners. We try to stay with the large scale large price stocks, because if we want something to move, like in SPX I showed you, that's $50. We want it to move across 5 days. You can't really go out and trade something like Microsoft. Well, Microsoft's okay. Something that costs like Micron that costs $58, and you can't move it. You can't move it $10. So the functionality of having large price stocks works very well in favor of the way we do spreads. Yeah, the exit strategy, yes, we do have it there, and it's based on the percentage loss. Yeah, it's in the workshop. No, the workshop is a series of videos that you can replay at any time, whatever your schedule is. Start, stop, doesn't matter. Go backwards, replay. a particular section that maybe you need replaying. But it's just like going to a site. There's a video. You press. It's kind of like YouTube. Press play, and we have different videos all listed there. Okay. All right. I think I am 5 minutes past my time, so I am going to go ahead and just say thank you, everybody. I really appreciate your time tonight, and I really hope to see you. If you have a chance, you join us, see what we're about. And if you're in my trading room, please let me know. Introduce yourself. We're a very friendly group, and everybody will greet you. So I really thank you again for your time. And Steve and Becky, thank you very much for your time tonight too. Thank you.